Hey everyone, it's Monday morning, 8 a.m. Pacific, and that means we start our week of interviews with experts. And it's Monday, so we're bringing Greg Dickerson back to the show. How you doing, Greg?
I'm great. How are you, Michael?
I'm doing very well. I'm actually feeling pretty good, right? I know we're going to have another bad week of news, right?
Yeah,
Headline news, unemployment could be worse than last week, which last week was a record. We are going to have negative headlines about cases and deaths, no question, right? Uh,
yeah,
but
yeah.
But I think yesterday was a big day because now we realize, you know what, we can't talk about Easter. That was kind of a little bit of wishful thinking. But I think if we can really talk about the end of April or May 1st, we can finally start to unlock the economy in parts, right? It's not going to just go back to where it was. But, we have 30 days to get testing in order. We have 30 days to set up infrastructure to, these 5-minute tests are out there. And it's just going to it feels good. And maybe it's wishful thinking, but it feels good. You go, you know what? I can see the light at the end of the tunnel. So I don't know. I don't know if others share that opinion of mine, but I actually feel much better today than I did last Monday. So I was just curious what you were thinking.
Well, I haven't seen anybody say that we're going to be going back to work April 30th. I'm hearing end of May, end of
Mm,
June
okay.
from all the top experts. Bill Gates will tell you it'll be 6 months.
Yeah.
I don't know if you saw his interview on CNN,
Hmm.
but I think what I got out of the message was because, we're not in lockdown.
Mm,
Most of the country is not locked down or isolated.
right.
Everybody's still working in construction where I live.
Hmm.
Groceries, I mean, everything is still open.
Hmm.
So, you know, and we haven't really had any meaningful amount of cases here either. In the county of 300,000, I think we've got 50, 60,
Okay.
so it hasn't even really hit here yet.
Mm,
So there's a lot of areas that still haven't even been affected. So if you're talking about New York City and they just totally locked everybody down for the next 30 days, then they might be able to start getting back to work and get some stuff open. But
hmm.
I think when you're talking about the nation as a
Hmm.
whole, I think the end of May might be a
Okay.
realistic target, maybe into June. That's what I'm seeing
Okay.
everybody saying.
All right. Well, still, there's a light just farther away. That's okay. It's darkest before dawn and all that good stuff. But for me, it's we've got to continue to ramp testing. We should put some thoughts into how we can start testing people away from hospitals that may be feeling sick. And this 5-minute Abbott test is pretty encouraging if we
Yeah.
can get that at scale. Because once we can start, even if it's just locally, and that's what I'm referring to of May 1, even if there's just additional locations where we can quote unquote open up Main Street, right? I live in the city of Mountain View. Our downtown is a street called Castro. It's full of restaurants, pretty much restaurants and coffee shops. And
Yeah.
it's ghost town.
Are they even doing takeout or anything?
Oh, they're doing takeouts, but again, yeah, it's
Yeah.
just really bad, right? I think if we get to a point where you go, you know what, you can now go to your Main Street. I don't think people are going to get on airplanes May 1st or anything of that nature. But if they instituted, like if Google, just for example,
Hmm.
Google's the biggest employer in Mountain View. If they came out and said, you know what, we're going to set up 5 Google testing facilities. If you're feeling sick, come here, drive through, 5-minute test. And oh, by the way, if you're sick, go home, quarantine yourself for 15 days or whatever it is. And if you're not, you know what, go enjoy a meal, go do something, I think that's
Yeah.
where we're going to
Well, you got
start
to
to get to.
remember that's where we started.
Hmm.
That's how it started.
Yeah.
So how do you end it? You know what I mean? So
Yeah.
it's almost like what Bill Gates is saying, dude, you got to shut the entire country down
Yeah.
for 30 days, sterilize and sanitize everything.
Yeah.
Then you might be able to meaningfully get back to work.
Yeah.
He's saying, and with what we're doing and the way it's going, that's kind of where we're at. So I guess, and I don't even know how this works. So I guess all the cases are peaking and then this thing just goes away, and is it going to come back in the fall?
Yeah.
I mean, there's just so many things that we don't know. But with you, I'm encouraged because there is going to be more testing. There are going to be vaccines. There are
Hmm.
going to be cures. So
Right.
by the time we get to the end of this, July, August, September, whatever timeframe that I believe realistically you're going to see the country actually get back to work, I don't think it's
Right.
going to be till the fall.
Okay.
Those things should be in place.
All
And
right.
that was the plan from the beginning. Let's slow this thing down
Hmm.
versus a shutdown so we can get some of these things in place. And that's kind of what they've been doing. So, how do you start it back up?
Yeah.
And what's the effects of that? And all we know is what we see in China and Korea and these other countries. So we have a testing ground there.
Yeah. Yeah, it's going to be interesting. You know, if this goes on much past May 1st in its current scale, or we ratchet up like Bill Gates is talking about, where we go full lockdown, which is frankly what I wish we would do April 1st. I just wish we'd just do full lockdown April 1st, bite the bullet, get it over.
I feel like that's what we might be working towards April 30th. I think at that point they're
Oh,
going to capitulate and say, shut it down.
yeah, that's a wasted 30 days. But
Yeah.
we shall see. But one of the things I knew I
Anyway.
wanted, yeah, one of the things I wanted to talk about today, because again, I'm coming to this conversation a little more encouraged. I might leave it less encouraged, but yeah,
No. It's, you know,
whatever.
what are you going to do? You know, there's nothing we can do.
But what I thought I would talk about is, you know, because we've both been in this 2 decades. You're actually a few years longer than me. I thought what we would talk about is what time in our career did we make the most meaningful kind of jump? I don't know, in wealth creation or whatnot, because I don't know about you, but there was definitely one period that was probably 18 months in duration where um, I was going against the grain. And in hindsight, it was probably the most meaningful jump for Olivia and I. So I was wondering if you had the same thing in your career, or for you, maybe it's just been consistency. So I thought we'd start there.
Yeah, you know, so I mean, it's been a number of things for me. Number one, when I first set out to build my first company in '97, that was a huge transition in my life.
Mm,
And then I sold that first company, you know, 7 years later,
okay.
and that was my first real exit. I built it into a $30 million company, excuse me, and you know, had real estate construction and all that. Sold it, transitioned my business model for a few years, and then you know that was the peak of the market, if you remember back then.
Yeah.
That was the peak from that '90s downturn into the 2000s and the dot-com, you know, bubble that fueled real estate back in 2000, 2001.
Yeah. I remember.
So we peaked at 405. So I sold everything. I sold all my properties, my companies, everything back then.
Mm,
And then I started, you know, doing some different things and, you know, moved more towards the outsourced development model.
okay.
You know, and I still had a staff and a team. Then I jumped in and started building again in 2006, 7, and then shut that down in 2009. You know, there was just nothing to do.
Right.
So it was 2009 when I made the final transition into full-time outsourced, you know, development. So that was a real pivotal time for me. That was probably the most instrumental time in my career because I learned the
Mm,
inner workings of how banks think, what they do in the situation we're in now when people can't pay their rent, can't pay mortgages. You know, how do the banks think? What do they do? How's the government react in those situations? So
mm,
I learned a ton from that standpoint and how debt is worked out, you know, how situations are worked out, you know, what the real effects of lack of liquidity, you know, things like that. Like we got this big CMBS bomb right now
yeah.
out there waiting to explode. You know, how is that really going to unfold and what's the real results of that? So those are the things that were real pivotal and transitional for me in my career. I learned a ton through all that, and it's helped me ever since in understanding how banks really think, how they really operate, and what
Mhm.
they're really all about behind the scenes. And it's not like what most people think. You know, everybody's all upset about, you know, Bank of America, this, that, and the other about, you know, forbearance and what they are and aren't going to do.
Right.
The banks, they don't even know yet, you know,
Yeah.
because, you know, they are ultimately fiduciaries of the institutional, you know, sovereign wealth funds and pension funds and institutional investors. So it's not as easy as everybody thinks that somebody behind a desk can just make a decision and say, well, we can work your payments out. So
Yeah.
there's a process that you have to go through. The good news is that they'll be able to go through it and there is a process, but it was that time period probably that was the most influential in my career that gives me the most peace in these times. Like you said, you feel positive, encouraged. I'm always positive, encouraged. I'm just trying to be realistic so that I can position myself where and when are going to be the real opportunities. You know, what are we realistically looking at here?
Yeah.
And in terms of those timeframes, but that's probably prepared me the most to be able to go through something like this and go, you know, it's going to be okay.
Yeah, for me, it was right around, you know, for me, it was 2010. It was a little bit in '09, but really 2010, if I had to pick a year that was most meaningful. And it was because it was the peak of fear. It's rarely where it came ingrained with me, where what I talk about today, right? Understand cost and access to capital, but also what's going on with the average consumer. And it's that I still talk about it today, 10 years later, right? Is what's the consumer thinking? Where are they on their screen of greed and fear? And that's why I could confidently sell stuff in 19, because I could see them tipping over into greed and stupidity, and why I can now go, oh, now they're afraid. And now you can see price drops and you see big capital letters in the MLS again, must sell. And
Yeah.
Lending just changed overnight. So it's that experience and the fact that I look at the market every day that I'm like, okay, opportunities are here. Some sellers got to sell and buyers are gone. And oh, by the way, the few buyers that are out there, most of them don't have cash because the CMBS bomb that you referred to was their access to capital. So
Yeah.
man, I'm encouraged by what's coming because of my experience in 2010. It's why I keep telling people, all you got to do is learn your market, right? Just learn your
Yeah.
market and figure out what's going on. So um,
Yeah, watch what's going on where and how, right? All
yep.
the way down to, the block, street, and houses on that street. And, what you're hearing and seeing right now in the retail market and investors are the
Mm,
vacant houses. That's the hot commodity right now. So if you can get vacant houses in
mhm.
your pipeline, that's where the real opportunity is right now. That's where your end buyers are,
Yeah.
because there are a lot of people that are sheltering in place that can't let people in, don't want to let people in. And with what's going on, if you're renting
Yeah.
or you're, struggling with your mortgage, well, the government's told you don't have to pay. So those
Yeah.
people are going to squat for as long as they can. A lot of them,
Yeah.
and rightfully so, right? There's people that are experiencing real trouble. So they're going to take advantage of this as long as they can, as they should, to be able to hopefully work it out. So there's a lot of sellers that aren't going to be able to sell. And
Yeah.
if they can, then you're going to inherit whatever's in that situation.
Yeah.
And you're going to
Exactly.
have to work with them.
Yeah.
You can't buy it and evict them. You're not
Yeah.
going to be able to do that.
No question. Given both of us have brought this up, the CMBS bomb, you want to kind of talk about what you see going on and kind of your understanding of what it is,
I
or
have no
no?
idea. There's just no buyers for it, right? So
Yeah.
those are just like in the housing market, 2008, 9, and 10. What created that was they were carving up. Let's say you live in a neighborhood and there's 100 houses around you.
Yep.
So they were carving those 100 houses up into 10 pieces and
Yep.
packaging those 10 pieces of that mortgage from those 100 houses into a security and selling it.
Yeah.
CMBS is kind of the same way. It's these loans and these notes that are originated with commercial properties that are then repackaged and sold as bonds to pensions, hedge funds, institutional investors. So right now, what's going on is there's no market for those assets because of what's going on in retail, office. Multifamily, there are still some, but even that's drying up.
Yeah.
Multifamily is the safest haven for institutional investors. The CMBS side of that has even dried up because they're expecting all these defaults and they don't want to get stuck with these properties.
Yeah. So just in case you don't know what it is, it's commercial mortgage-backed securities, correct?
That's correct.
Yeah. Yeah. And essentially, this is going back to Carl Icahn, I think like 3 weeks ago. I think we actually talked about it. He made a call on the CMBS market and said he's
Mm-hmm.
shorting it. The guy's a genius, right? Office is changing,
Yeah.
right? People are proving they can work from home. Retail will, the malls will never be the same. Um, man.
Yeah, malls are the big ones. And here's the interesting thing. So there's a bulletin out today that Taubman, one of the big
Oh, I saw
REITs,
that. Yeah.
yeah, they're sending notices out to their tenants, mall tenants. You are to pay your rent. We are not forgiving your rent.
Yeah.
Rent is due.
Yeah.
So what they're doing is they're positioning for bankruptcy. So you read
Absolutely.
between the lines. They have to do a certain set of things in order to turn those keys back over and file bankruptcy. So there's going to be a lot of REITs that are going to end up filing bankruptcy here real soon with these mall properties.
Yeah. So let's just play that out. I don't know how REITs are organized. I understand them just intuitively, but essentially REITs that are predominantly mall driven. They do this. They do a set of activity. They go, hey, can't fund the debt anymore. Here's the keys, Mr. and Mrs. Lender. I guess the REIT goes to zero, right? That's kind of how the public market treats it. It goes to zero, then the assets go back to the bank. Is that kind of what happens?
Yeah, and it depends on their holdings and overall. So they have certain properties,
Mm-hmm.
and it depends on what they're filing, whether it's a liquidation or a restructuring.
Ah, okay.
So, it depends on how that's going to go. But they're a publicly listed company
Yeah.
that owns property. So they have tier 1, 2, 3, and 4 levels of properties. So it just depends on which ones they're putting in there and which ones they're able to hang on to. And it's going to be a restructuring more than anything else. But
Yeah.
yeah, they could ultimately end up having to liquidate the entire company. So yes, the stock goes to zero, gets wiped out unless somebody else steps in and buys it.
Mm. Wow. That is,
Enron.
yeah, exactly. That is pretty scary to think about because there are a lot of retirees
Mhm.
that put money into REITs because they live on that, right? They live on
Yeah.
the income, right? And man, the world's
So
going to be
that's the other
different.
side of the interesting equation is, there's a lot of people that do rely on 401k, CDs, money markets, things like that for income. And with interest rates where they are, that's been eliminated. So
Yeah.
where does that individual go now? Because, the stock market, we're not done yet.
No,
What
not
we
done.
saw last week, you've heard of a dead cat bounce,
Yeah.
sucker rally.
Yeah.
I don't know if you've heard those terms,
Oh, for
but
sure.
listeners, go look up dead cat bounce and go
Yes.
look up sucker rally. Because, in times like this and in 2008 when the market was selling off, you would get these spikes, not as severe or as giant as we're getting now because the market is just so overinflated and, all the electronic trading that's going on. But
Yeah.
those things happen to draw people back into the market, and then bam, it goes
Yeah.
down. So the question is, how long, does it last, and what are we going to see? And you and I know the real effects of what's going on have not reverberated to the
No.
markets yet because
Yeah.
of, like you said, the job losses this week. The real effects on business. How long is this really going to go? Like, there might be some optimism about this, April 30th, but it's going to take time for that to ramp up.
Yep.
So, I don't think that's baked in yet. I think the initial shock is what we saw for that initial first downturn. I think there's another tier yet
Oh,
before
for
we
sure.
start climbing back up.
Yeah. Yeah. We haven't found the bottom. We're not on firm footing. I still think lots of tech is still in trouble, but
Yeah.
yeah. So another thing I wanted to talk about, again, 2010, 2009 were important years for us. For me, it wasn't necessarily about getting cheap prices, which obviously helped, but most of that wealth was when I could communicate with sellers and get creative on putting a deal together, right?
Yeah.
Creativity, like you said, right? Creativity of understanding what's important to the seller. Maybe it's a bank, maybe not. But that was really where that was game changing for us. So,
Mhm.
Can you talk about some creativity and some things that you've done over the
Yeah.
years to put deals together other than just being cheap?
Yeah. So it's not always about price. Sometimes it is.
Right.
And, when you're dealing with people, you give them options. Hey, here's a cash price. Here's an owner finance price. Here's a lease option price. Give them
Exactly.
some solutions depending on their situation. But here's what's really cool and interesting. And this is with banks. So for everybody listening, start making a list of your local and regional banks because they're going to have what's called special assets managers. So anything that's in trouble or in default or heading in that direction gets turned over to the special assets manager. So they can make some decisions on those properties. Bankruptcy attorneys are other good ones to build a network with and start staying in front of. There's going to be a lot of properties that you will be able to step into and just take over,
Yeah.
where local regional banks will transfer that mortgage over to you. So you'll be able to walk in and take over properties and businesses for zero money. They
Yep.
just want you to take it over. So I did that with some developments that went into default where the bank brought me in to finish them out. So houses, developments, and then existing assets back in 09. So
Mm-hmm.
when I say I learned the inner workings of the banks, this time around, what everybody learned, that's why you see the Fed acting the way they're acting, because they don't want the banks to fail. And if these things don't get made whole, and the CMBS is going to be an interesting thing to watch, what is the Fed going to do about that?
Mm-hmm.
Because they don't want that market to collapse, and that's what everybody's posturing for. That's why those signals are being sent because, hey, government, come into the CMBS market. So anyways, you'll be able to step into some properties on the banking side and just take them over. They'll just deed them right to you. You take them over, you finish it out, get them performing, whatever. There'll be opportunities to step in with people that just need a balance sheet. So Michael, you've got a balance sheet. So you might be able to find a syndicator who's got a great asset that, he's in trouble, doesn't have reserves and doesn't have the balance sheet. So you could step in and take that over, or provide that liquidity or that balance sheet that they need to keep things going so they don't lose the property. And you'd be able to step into some deals that way. And then you have sellers that, that you can do the traditional subject to where, and I heard somebody say this, that's teaching subject to, created a Facebook group or something. He said that he took over the mortgage. Now, when you do a subject to, you're not taking over the mortgage. You're taking title to the property. The mortgage still stays intact and in the seller's name, in the original owner's name. So you're not taking over the mortgage. You're taking title to the property. If you assume the mortgage, then you're taking over the mortgage. So there's a difference, and people understand this. There's a very big difference between a loan assumption and a subject to. They are not the same thing. Subject to leaves the original property owner on the hook for that mortgage. They are still responsible for that mortgage in every way. A loan assumption is where you step in and you take that over. You can do those on the on the residential side. In fact, VA loans, a lot of those are assumable. FHA loans, a lot of those are assumable. So that's something to think about when you're dealing with property owners. Ask them, is your mortgage assumable? And if they don't know, call your mortgage company and ask them, because then banks will do that too. They will let other people come in and assume that loan.
Yeah, especially strong buyers with the balance sheet, right? Because again, most banks are looking at this as a short-term, maybe
Yeah,
1 year problem, and the right answer could be let them assume it.
right.
It
Now,
could,
assumable, you're going to have to qualify. The
true.
bank's going to underwrite you just like they do the original borrower, subject to, literally they are transferring title to you, which will trigger a due on sale clause, but that's only if the lender finds out about it and calls that loan. Generally, they're not going to do that because they got their hands full, right?
Right.
They're going to be so busy dealing with loan modifications and forbearance and all that. They're not going to care. As long as the money's coming in, they're
Yeah.
not going to care.
Good deal. Yeah.
So there will be some opportunities there. So everybody needs to really get up to speed on subject to how to do that. Lease options, rent to owns, those strategies, and loan assumptions. Those will probably be less and fewer and far between. Those are better and more advantageous on the bigger deals,
Right.
but they do work in residential as well.
Yeah, and again, that's what I saw in 2010. Is we took over multiple buildings. Again, they were small. We took over an 18-unit building for no money down, lower interest
Mhm.
rate. We had to escrow 25K for repairs, which we would have done. We would have spent anyway. That was the bank security. Then we got 2 10-unit buildings side by side from two different banks that said, "Hey, you're fixing that one. Come fix ours." Um, you know uh, that again, most of our net worth came from solving problems and being a strong buyer, right? So it's going to happen.
And here, and a lot of the companies, yeah, and I've gotten involved in a lot of companies. So real estate, so there's the business side
Mhm.
where people will give you the business or half of it or whatever just to come in and provide a balance sheet so you can borrow money and keep the business going.
Yeah.
So, this SBA bailout that's out there, again, it's a loan. You're gonna have to qualify. So there's credit requirements, there's liquidity requirements,
Yeah.
there's, collateral requirements. So, there's going to be opportunities to step in and help somebody save their business and take equity in the company by just having a balance sheet.
Yeah, it's going to be a good time. Then again, the
Mhm.
last one I want to talk about is access to capital. I think a
Yeah.
lot of people who've been in this business 5 6 7 years got drunk on the fact that it was really easy to get loans, 90% fixer loans and all these other hedge fund based loans, and they vanished overnight. And you need to have options, right? And the market can change. And I saw the market change overnight. And for me, it was in '08 when it changed overnight, when I couldn't qualify for a bank loan. That was shocking to me. So, you have to
Yeah.
find another way to go. So, um, how do you think about access to capital in your position?
So, on the larger assets, that world has changed big time right now.
Right.
So they are really taking a good hard look at underwriting. I mean, all the way down, they're really looking at what city that asset's in, where
Mhm.
it's located in that city, what year it is, who the tenants are. So, Freddie and Fannie,
Mhm.
they're really looking at that now. Uh, the capital markets have pretty much all but shut down. There's still a few balance sheet lenders, there's still a few life companies, but they've changed. They're looking for 12 to 18 months of escrows,
Mhm.
not reserves, escrows. So you
Right.
got to give them the money and put it in their account in order to qualify. And then they're going to want additional escrows beyond that monthly. Now, after a certain period of time of servicing the debt, I think they released some of that. But initially going up, they're going to require lower LTVs, more escrows and reserves, probably more balance sheet requirements. So they're looking at these deals a lot closer. And the kicker was they did it with deals that were in the pipipeline, the ones that they had
Yeah.
committed already. When they changed their underwriting, it was like midstream. So whoever had a deal going that thought they were getting 80%, 6 months reserves, all these different things. Now all these new rules came out and said now you got to do this. So they had to go back and raise additional capital. So you've got to take that into account when you're looking at deals. So that's one avenue that we just don't know. That's changing weekly. In terms of that lending requirement or that lending environment. On the residential side, you still have private and hard money. I know a lot of hard money lenders are pulling out of different markets
Mhm.
because they're smaller outfits. They're not sure what's going on. They're not sure what the housing market's going to be like. But the bigger, more national private hard money lenders are still lending. But again, they're lowering LTVs. They're
Yeah.
requiring more cash, from that investor to do the deal. So those things are getting tricky. Now, here's the real interesting part: local and commercial banks. So back in 2009, when banks were failing, nobody had any money. I was still able to borrow money to do spec development from
Mm.
local banks
Wow.
because I had a relationship. I've been banking with them for years. I had a track record. They knew I knew what I was doing. I had the assets, all that. So if you're solid and you've got good reserves, you've got a good balance sheet, you've got a reputation and track record with your local bank, they're going to continue to lend. Banks have to make money. They don't make money unless they're lending money.
Mm-hmm.
So make sure that whatever you do right now, shore up your balance sheet, shore up your financials, put some cash in the bank. If you're in a position to do so, you're going to look very attractive to these lenders as things progress. And you're going to be an ideal candidate to be able to borrow money. Now, it'll be a little bit different. You're going to have to put more money down, those types of things. But there'll still be money that you can borrow. That was really interesting to learn that, during that environment when nobody else was lending. I still had one or two banks that I could borrow money for spec houses, and nobody was lending on spec houses.
Yeah, I'm curious, when you're looking at the market today, again, access to capital is, I guess, what I always ask this question: what do you think is your most valuable skill today, heading into what will be an interesting environment for a couple of years? Is it your network? Is it your access to capital? Is it your creativity, your experience? I mean, you have so much going for you, and you've got to be just so excited about what's coming up. But what's the number one thing that you're like, this is why I'm so excited?
My hairstyle. I got a lot going for me right there. So,
oh, that's funny.
That's an interesting one. So I would say, let's say all things being equal, for anybody who's listening, is the creativity. Okay. Knowing how to structure deals creatively and understanding how banks think. That is probably the most valuable component of everything, because without knowing what I know and know how to do what I do, and knowing how to evaluate markets, evaluate deals, and find opportunities, nothing else matters. You can raise all the capital in the world, but if you don't know how to find and structure deals at the right price, none of that's going to matter, because the capital won't go in to deal with you if it's not the correct deal structured the correct way. So that's probably first and foremost. And after that, it's relationships, which all of the other things are built on. So relationships in terms of raising capital, because I can raise capital on demand, and that's what I teach people how to do. And that was all relationships. People call me, like my phone rang twice from guys that I do deals with while we were talking every day. What are you seeing? What's going on? Anything we can buy? So I mean, but that's 20 years of relationships that have been built over a track record. But you can build those. So it's all about the relationships in terms of raising the capital, but understanding what you say, knowing your market and how to know your market at an intimate level, and what the deals are and where they are in that network. So I've got a network of people that want to do deals, and I've got a network of people with deals. So I get those calls coming constantly. I don't even have to do anything. They just come in.
Yeah. It's funny that I asked that question knowing how I would answer, and it was the same answer. It was creativity first, because if you can't look at a opportunity, understand what's important to the seller, whether it's a person, a bank, or whatever, and then put together a structure that allows you to finance it, nothing else matters. And then you're right. After that, it was network, right? Who is in the network? Who's in the boat with you? Who do you have proven relationships with? Who wants to, go along with you on this journey? So I wasn't sure we were going to answer it the same way, but exactly the same. So that's pretty cool.
Yeah, man.
So as we kind of wrap this one up, what kind of closing thoughts do you have? Again, this is changing weekly. Glass half full, glass half empty. What's going on in Greg's world?
So the biggest thing to do, and I'm going to assume, let's say the bulk of your listeners are residential or small multifamily, watch pending sales, watch what properties are closing to list price to close price, ask price to settle price. What's that gap? Usually it's about 5%. Properties are settling, 5% below the ask price, and, sellers markets, it goes up. But watch those two things, pending sales and, sale price to settle price. That'll really give you a good indication of what's going on in your market and what's happening. You can watch new listings, but that doesn't really tell you a whole lot. I mean, anybody can list anything. You want to watch pendings on a daily basis. What's going on under contract and where? How long was that on the market? What is selling? Where? How long was that on the market? What is it selling for? List price to ask to close price.
Yeah, that's great information. Again, pending home sales actually came out today. CNBC report, I think it was 8 a.m. No, it had to be, I don't know when it was, or before our call. It was up 2.4% pending, but we got to remember that was February data. February data is irrelevant in the environment.
Yeah, February was huge. It was a big month everywhere. Record, remember, rates dropped, so it was record low interest rate. Started happening, the rates ticked up again. So yeah, February was strong everywhere. So March is going to be a little bit different. April's going to be a little bit different.
Just a little bit.
Yeah. So be positive. Like you said, we're going to get huge unemployment numbers. My guess is, 25 to 30% of the country has to be out of work. I mean, it's got
to be. We're a service-based economy. And this is something that we have told the service-based economy to go home.
Yeah.
All right, man. Well, this has been a lot of fun. I appreciate your time again, and we will talk to you next Monday.
Yep, sounds good.
All right, man.